Hello everyone, welcome back to my YouTube channel. And today we are going to discuss about the uses of the financial statement. Let's get down with the video. First of all, there are two types of uses of the financial statement. The uses of the financial statement are internal and external. Internal uses are those who are directly related to the business and its functioning. That is, they have their manipulative nature towards their organization. That is, they can easily manipulate with the functioning of the organization. They are directly in touch with the organization. Those person are called as internal user, and they can use the financial data to take the business decision, right? Why do they require the financial statement? Because to take some business decisions. So these people, they are called as internal uses of the financial statement. The next one is the external uses. The entities that are interested in the financial performance of the business but do not participate. This is the very important point. They do not participate in the operations of the business. That is, they require to know what is the financial condition of the company, but they will not influence in the functioning of the organization. So that is the key here, right? They are indirectly related to the business. That is, they do not have any manipulative nature towards the functioning of the organization. So these two are the types of uses of the financial statement. Now moving in depth with the internal uses, right? Internal uses can be classified into three. First one is the owners. Who are the owners? The one who has founded the company. He is the founder of the company, right? They have invested some money in the company, right, as a capital. So they have to know about their profitability, what has actually happened to their money, whether it is being utilized properly or not. All these they can find out with the help of the financial statement. And number two, the management category, they will use the company's performance for the better decision making. Why? Because only then you'll be able to change or alter the procedures in the next quarter or the next year. So the management uses the financial statement for problem solving and decision making. Okay. And third, employees. Why would an employee need a financial statement of the company? Because to know about their remuneration, working benefits, and retirement benefits. How can they come to know about it? Only when the company is earning profit, their job is secure, right? When the company is going on a loss, the company will obviously try to sack the employees, right? So they have to know what is the profit earning capacity of the company to know about their remuneration, working benefits, and retirement benefits. Okay, so the internal uses of the financial statement are owners, management, and employees. Okay, now moving on with the external uses. External uses, as I have discussed earlier, they do not have any direct connection with the company, but they are interested in the financials. Why? Let's get to know them. Okay, the first one, creditors. Who are creditors? Creditors could be a bank, a financial institution that has lended the money to the organization. Why are they interested? Because they have put in their capital there. They have invested their money in the company, right? Not invested per se, but they have given their money to that organization. So they want to know what is the liquidity position. Liquidity position is how much of a cash and cash equivalent is available with the company. That they should know. And then by their repaying capacity, whether their amount will be repaid on the set date, whether on maturity they will be able to get back their amount. That is visible in the financial statement, right? So the creditors require them to know about their liquidity position and repaying capacity. Okay. Number two, the investors. The investors are someone who are external of the company, but they have just invested like a shareholder. They have given their money. Okay. So shareholders, debenture holders, all these are investors, right? So they want to know what is the future earning capacity because they have invested the amount. Now they are one of the owners of the company, right? Now they want to know whether actually they will be profitable, whether they will be able to earn a good return in the future. That they can understand with the help of the financial statement. And the next one is risk bearing capacity. If there is any unforeseeable situation happening, will they be able to manage? Will their amount be safe even if there is any unintentional happening in the organization? So they should be ready to bear the risk that is happening in the future, right? So to know about the earning capacity in the future and to know whether they have a good risk bearing capacity, the investors will require the financial statement. And number three, the customers. Why would the customers know about the financial statement? They should know to get the stability and profitability. Why they should know about the stability and profitability? Because to get continued supply of goods and services. Only when there is a stability and profitability in the organization, they will continue their business. Only then there will be a supply of that goods and services, right? So they want to know whether the company is actually making a good profit. That's all. That's all matters to the customer, right? In order to get a continued supply of the goods and services. And number four are the tax authorities and government. Why? Because they can get income tax and indirect tax from the organization. Obviously there is a this is a corporate industry, right? So they have to pay their own income taxes. The owners have to pay the income taxes, and the indirect taxes has to be paid by the government, right? Paid to the government. So the company financial statement is very important in computation of the income tax and the indirect tax of the company, and it helps the government in framing the policies and regulations. For example, only to know about the industry, the government will be able to frame a proper policy and regulation, right? Only then they'll be able to frame a proper policy and regulation for the industry. To know that, the financial statements are very helpful. Number five are the researchers. For example, any MBA graduate or a PhD scholar could try to research more about and analyze the and evaluate the performance of the company, for which we use the financial statements and annual reports of the company. For example, if you are a PhD scholar or an MBA student who is interested to know about their bond valuation or their share valuation, you will obviously will have to use their financial statements, right? So even the researchers are benefited with the help of the financial statement. And finally, the general public. Why would the general public be worried about the profit of the company? They are not per se worried about the profit of the company, but they are interested in the corporate social responsibility measures that are taken by the company. Why? Because they are living in a particular society, and the company is obliged to give back to the society in a good manner, right? The amount of profit that is earned by the company and the point and the percentage of that profit being utilized in the corporate social responsibility done by the company, that information is evident from the financial statements of the company. So the external uses of the financial statements are creditors, investors, customers, government and tax authorities, researchers, and finally the general public. I hope the video was helpful. Thank you so much for watching my video. Subscribe for more.